It's Wednesday, January 17th, 2024. A lot to talk about today. Please make sure to like, share, and subscribe. Without further ado, let's get right into what's happening. I want to start today's video by acknowledging and responding to a comment from yesterday. Somebody wrote me and said, all this talk, and I'm just paraphrasing here, all this talk about getting food is stressing people out. They don't have any money. Just let it be. Please comment down below on this comment. Just let it be. People are stressed out. They don't have any money. So just let it be. We shouldn't talk about it. We shouldn't talk about the danger that is coming. We shouldn't talk about preparing. We shouldn't be talking about putting food away. I wonder what a majority of people did with all of that stimulus money. I wonder what people did when they didn't have to pay rent. I wonder what they did when they were getting those huge unemployment benefits. Did they go out and buy a Dodge Charger? Did they not have to pay their rent? Did they take a trip to Vegas? But now, here we are. We shouldn't be talking. We shouldn't be warning people about preparing. And I'm sorry that you went and bought a Dodge Charger. I'm sorry that you went to Vegas and gambled all your money away. I'm sorry that you did not do the right thing and take some money and prepare. So the rest of us shouldn't talk about it. We shouldn't be warning anybody. I think that's extremely ignorant. I'm sure you had a great time when all the money was flowing and you didn't have to pay your bills. But here we are now, and we have danger knocking on the doorstep of America, where people, if they think it's bad now, if they're stressed now, wait till you see what is coming. But comment down below. What do you think about this? We shouldn't be talking about this. Just let it be. All this talk about getting food is stressing people out. They don't have any money. Just let it be. So maybe you go get a side hustle. Maybe you have a garage sale. Maybe you live a little lower below your means. Maybe you sell something like a car that you can't afford. And maybe at the end of the day, you have a little extra money, so maybe you can go get some food so that maybe you're not stressed out. I've been making these videos for years, warning people not to live above their means, to prepare, to buy things that they need, not just things that they want, so that you're not stressed out at night, so you can sleep 8 hours a night, so you don't have nightmares, so that you're prepared for what's coming. But now we just shouldn't talk about it. We shouldn't talk about the boogeyman. We should just ignore it and let people be. Just let it be. What an ignorant excuse for what's coming. What an ignorant way to live your life. Just let it be. Ignore it. Ignore reality, ladies and gentlemen. Please comment down below. I'd love to know your thoughts on this. So I guess that's the solution. Just let it be. And just let everybody collapse while the economy collapses around them. You know, these people who continue to ignore reality, who continue to just make excuses that they don't have any money. And look, I know people are hurting out there. There's no doubt about that. My heart goes out to them, especially people with kids. And there's a lot of people out there that didn't go to Vegas, that didn't buy a Dodge Charger, that just didn't waste their money. And they're struggling. I understand that. And I think these are the people that need the most help. We shouldn't be sending money all over the world. We should be helping our own people. But at the same time, there's a lot of people out there that just wasted the money. And no matter how much money you give them, they're just going to continue to spend it, not worry about debt, not pay off debts. No, they're going to continue to party on. And it's these people right here now who are getting very, very nervous. They don't want to hear it because they know that they're going to be a victim of what's coming. So if you have the means, if you have the ability, if you can go work an extra side hustle, if you can work an extra 10 hours a week, this is what you should be doing. You know, if you can sell something, have a garage sale, raise some capital, do whatever you can right now to get yourself out of debt and have some capital put away so that you can go buy some food, so you can go buy things that you're going to need, so that you have a cash reserve in case maybe you lose a job or a spouse loses a job. To sit here and just say, let it be, I don't want to talk about it, well, that's fine, but you're going to be a victim. But for the rest of people out here watching this, don't take this ignorant advice. Get off the couch, Go work 2 side hustles, do whatever you have to do, sell whatever you can, downsize, live below your means, keep hustling, keep working those side hustles, work the overtime, do whatever you can do to raise more capital. Sitting around, not working, not raising capital, especially if you have 2 arms, 2 legs, I mean, if you're in your 30s, your 40s, your 20s, whatever, and you're just sitting around most of the day not producing, not being productive, shame on you. You will get what you deserve. CNBC, holiday sales climb, boosting retailer hopes that shoppers will spend during uncertain 2024. This is just, more of the nonsense that's taking place in America. I guess that they had money to go holiday shopping, yet now they have bigger credit card bills than ever. And remember, most people, at least half the people that spent in 2022, in 2023 when they were spending, they hadn't even paid off 2022. And now here's these people that are continuing to spend in 2023. Now they'll continue to spend in 2024, not paying off 2022 or 2023's holiday shopping. And they're going to continue to spiral out of control. What happens when those credit cards get maxed out? People just don't learn their lesson, but they're going to. Holiday sales rose 3.8% year over year to $964.4 billion, according to the U.S. Census Bureau data. And it says here in the article on CNBC, it shows resilience of consumers after they endured higher prices of food and other goods. Resilience? Using a credit card is resilience? No, what it shows is the stupidity of the average consumer. Repeat, the stupidity, not resilience, but the stupidity of the average consumer, because the average consumer is a debt slave. And what do? They go deeper and deeper into debt. Then they make excuses that they don't have any money, and we shouldn't talk about food preparations because they're tapped out and they don't have any money. But they went to Kohl's, they went to Macy's, they went to Best Buy, they bought all the toys, and they continue to get deeper and deeper into debt. But they have no silver, they have no gold, they have no plan, they have no skill set, they have no cash, but they have a big screen TV, and they bought a bunch of garbage made in China. Here's another one from The Hedge today. Retail sales surged in 2023, led by autos and food services. Gas station sales slumped. So, just continuing on with this, how in the world, if now we're being told yet again that the consumer is resilient, why would you cut rates? To me, this would be a great time to be raising rates, not cutting rates. Why would you cut rates if unemployment's down, the consumer's strong, the stock market is up? Why would you cut rates? You would be raising rates. An important reminder here, retail sales data is nominal in this article, not adjusted for inflation. So, is this just a reflection of falling gas prices and soaring food prices? Comment down below. Here's another one from The Hedge today. Markets are overlooking how much worse this can get, how inflationary it could prove. The shipping crisis, as most of you know, in the Red Sea is continuing to get worse. Maersk says the crisis could last months. Many are saying it could last a year. Chevron is warning of very real risk of oil prices. This could be very, very difficult to resolve anytime soon, ladies and gentlemen. Container rates have skyrocketed. Insurance costs to insure those containers also has skyrocketed. And we're going to see the shipping companies literally just it's going to be every shipping company for themselves and how they're going to ship product across the world. They're going to try to protect their maritime trade, and it's going to be every shipper for themselves. CNBC, 10-year Treasury yield hits 5-week high after strong retail sales data. Again, propped up with credit cards. And think about where all of these products are being made. We're making other countries much wealthier because we're buying stuff from places like China and Asia. We're not making this stuff here. We're borrowing money we don't have, and we're purchasing products made in other countries, making them wealthier while we go farther and farther and farther into debt. Now, most people will go, well, who cares? The 10-year Treasury yield is at a 5-week high. Who cares? Well, you should care, because this means if you have to borrow money, you're going to pay more to borrow that money. Credit card rates go up. Mortgage rates go up. Auto loans go up. College tuition loans go up. You're going to pay more to borrow that money. You're going to pay more to finance your debt on those credit cards. We're approaching 23% on the average credit card right now. Pretty soon, it'll be over 23%. Here's another one on CNBC. Jamie Dimon warns, all these very powerful forces will impact U.S. economy in 2024 and 2025. Now, look, I'm not a huge fan of Jamie Dimon. Most of you probably aren't either, but he's not a dumb guy. He says, I think it's a mistake to assume that everything's hunky-dory. I have to agree with that. When the stock markets are up, it's kind of like a little drug. We all feel like it's great. But remember, we have had so much fiscal monetary stimulation, so I'm a little more on the cautious side. I think he's probably more than a little more on the cautious side. Goldman Sachs CEO David Solomon said this, I'm very concerned about the growing debt. It's a big risk. We're going to have to deal and reckon with. Nobody wants to deal with it. Nobody wants to reckon with it. Nobody wants the party to come to an end. But at some point, it is going to come to an end, whether we like it or not. So you have a choice to make. You can be one of these ignorant people who says, I don't want to talk about it. I don't want to deal with it because I'm broke. Or you deal with it and you talk about it. You know, how do you come up with a solution or a strategy unless you talk about it? So many people want to sweep what's happening under the rug. They want to ignore it and hope that the boogeyman just disappears. Here's a newsflash, ladies and gentlemen. The boogeyman is not going away. The boogeyman is not going to disappear. The boogeyman is here. And he is going to scare a lot of people because they're not prepared for what is about to happen. Fears of prolonged Red Sea shipping crisis fuel inflation fears as oil retail cargo delays rise. This also on CNBC. And of course, you know, the people will be like, oh, you know, you're so negative, you're so doom and gloom, you're making this all up. No, this is literally every article I'm giving you here today is from CNBC. I mean, it doesn't get much more mainstream than CNBC. Shell Oil confirmed its tankers are avoiding the Red Sea. Shell's CEO said that there would be at least a 5 to 10% price impact on the short term. The world's biggest shipper, MSC, that is Mediterranean Shipping Company, alerted clients of additional rate increases for some container traffic coming to the U.S. Starting February 12th. Then you have Honor Lane Shipping, another shipping company, and they expect the Red Sea situation to last 6 to 12 months. Here's some great news. Home builder sentiment surges amid sharp drop in mortgage rates. Real quick, just another comment I want to respond to. Somebody said a few days ago that I want to see things crash. No, I don't want to see things crash, but things have got to crash. Otherwise, we're going to continue to have this overvalued market, overvalued housing. We're not going to really ever know what anything really is worth or what it should be priced at because everything is so overvalued because we had all these trillions of dollars injected into the market. We had the Fed buying mortgage-backed securities. We had the Fed keeping interest rates next to zero for 10 years. We had mortgage rates under 3%. So they've created massive bubbles across the board. We have a stock market that is more overvalued and overpriced than any time in history. So not that I want to see things crash. Things have got to crash. They must crash so that people can afford to buy a house, so that people can afford to rent an apartment, so that people can afford to actually buy a stock. So we know true valuation, what the real valuation of an asset is, because everything is overvalued. So things must crash because things have been artificially propped up for so long that we don't really know the true value of these assets. So not that I want to see a crash and see people get hurt, but people are getting hurt by these massive bubbles. People are getting hurt by these valuations that are completely out of whack. things have got to crash. We've got to shake the dead branches off the tree here immediately, or people are going to continue to not be able to afford to live day to day. So things have got to crash in order that to have a healthy economy, a healthy stock market, a healthy housing market, a healthy middle class. Home builder sentiment surges amid sharp drop in mortgage rates. The sharp drop. I looked at bankrate.com today. The 30-year fixed rate is right at 7%, so it's climbed up a little bit. But articles like this and news stories like this, to me, are a complete joke. Home builder sentiment surges. Surges on what? 7% mortgage rates? So home builders can be as confident as they want to be, but they don't have home buyers, because now people are having a very, very difficult time qualifying to buy a home, and it's going to get much more difficult as inflation's not going away. Inflation is coming right back, and it's going to continue to go up. And this is going to be a big problem for home builders. It's going to be a bigger problem for existing home sellers, because they are in la-la land. They still think this is 2021. U.S. real estate market will be ugly next year, very ugly next year. Howard Lutnick warns, the CEO of Cantor Fitzgerald. He said that we're going to see $700 billion to $1 trillion in real estate defaults in the next year to 2 years. That's what's coming. He said we will see a very ugly real estate market over the next 2 years. He says, I think it's all this talk of 175 basis point cuts. He said maybe this year we see 50, possibly 75, but more than likely probably maybe 50 basis points. Other than that, rates will stay steady. We will see a lot of commercial real estate loans wiped out. So many realtors right now are in such big trouble. Right now, realtors are struggling just to pay rent on their offices. That's how bad it is. Think about, and realtors have quit writing me. They don't write me any longer. They were telling me that the market was going to turn around. I remember last year I had a lender tell me that rates would be back down to 4% over the summer. That's when they were 8%. So none of these people really know what they're talking about. The lenders, the real estate agents, it's all hope. They're trying to sell you something. You have to realize that. And they're not all bad. Don't get me wrong. There's a few of them that are good. But the majority of them need to sell you a house. A majority of lenders need to lend you money, or they cannot make the payment on their office. They can't pay their own rent. They can't pay their own mortgage, their own home mortgage, unless they're selling you a home or making you a loan. They don't care if it's the worst time to buy or the best time to buy. They need to sell you a house to exist, to survive. This is the worst possible time to buy a house, period, hands down. You can tell me anything you want to tell me, but to pay for an overpriced, overvalued house, and we all know that this market is completely overvalued, overpriced. Just go back to look where prices were just 4 or 5 years ago. There's no way you can justify these prices right now on top of a 7% mortgage. I think 7% is fine. I think that's normal. What isn't normal is watching a home go up 150% in 4 years. That's not normal. So we need to see home prices adjust, and they will adjust, because this is a war of attrition between the sellers and the buyers. There's a lot more sellers than buyers. There's a lot of people who would love to buy a house, but they don't qualify. And that pool of qualified buyers is going to continue to shrink as the pool of listings continues to expand. So I'm going to wrap it up with this last article. And this, again, another indication, another example, another barometer of just how bad this economy is. It's coming from the hedge. It's titled Fire Sale. Blackstone's defaulted Manhattan office tower loan marketed at 50% discount. The turmoil in the office market is causing a lot of concern. It was probably about 4 years ago where I really started filming a lot of vacant property in Southern California, the vacant restaurants, the vacant office buildings, the vacant malls, etc. And now this is really becoming a big deal. It's a big issue because you have hedge funds, pensions, regional banks all tied into this. And we're going to see real serious trouble, serious pain because of what's happening in commercial real estate. Bloomberg reports a $308 million mortgage on a Manhattan office tower owned by Blackstone is being marketed at $150 million, about a 50% haircut. Moody's Analytics data shows that 19.6% of office space across major U.S. metro areas was not leased as of the fourth quarter of 2023. If nobody is leasing these buildings and money's not coming in, this is going to put extreme pressure on many of these regional banks, big banks too, hedge funds, pensions, investors. This is going to be a big problem that at some point we're going to have to deal with. And there is going to be a lot of pain felt here. Now, a quick side note, BlackRock owns part of Invitation Homes. They own about 9.7%, close to 10% of Invitation Homes. Why is this a big deal? Well, Invitation Homes is the biggest owner of single-family homes that they rent. Okay, these are single-family home rentals. And they overpaid on a lot of these homes. And so eventually we're going to see home prices come down. I think they're going to come down substantially. And when they come down, guess what else comes down? Rent prices come down too. And what happens when a company like Invitation Homes, where BlackRock owns about 10%, what happens when these rent prices come down and they overpaid on these single family homes? It's a problem. It's going to be a big problem. And already you see the issue here with Blackstone. They're going to take a massive haircut. You're going to see BlackRock have to take a massive haircut too, because they all paid too much for these homes. And at some point, rents come down. And when rent comes down enough and it doesn't equal out to the monthly cost of these overpaid homes, then all of a sudden you're taking a loss. And so what happens? Then maybe they're going to have to start having a fire sale of these single family homes, or we're going to see big losses at the Vanguards, the BlackRocks, the Blackstones, the Invitation Homes, because they all had the FOMO too, and they overpaid for a lot of this real estate, whether it's commercial buildings or single family homes. So be prepared. Let's keep an eye on this. I think it's going to get very, very interesting in 2024. And the problems aren't going to go away in 2024. They're going to continue into 2025. I'm going to leave it there today. Please feel free to comment down below. Do you think we should just ignore all this? We should just give up, not talk about it? It's just too painful. We don't have any money. Let's just slide it under, the rug and forget about it. If you think that's ignorant, comment down below. Let me know how you're preparing. I just think that there's people out there that don't make excuses. There's people out there that just go, look, I'm going to have to hustle more. I'm going to have to work extra hours. I'm going to take on an extra side hustle. Maybe I'm going to start my own business. Maybe I'm going to sell a bunch of things I don't need. Maybe I'm going to sell some cars. Maybe I'm going to sell the boat. Maybe I'm going to sell the RV, and I'm going to put some cash away and pay down my debt. Please comment down below. Let me know how you're preparing for this. Did you have to sell some toys? Did you sell the house and move to a smaller house? Did you sell the house and go rent? Did you adjust your living standards? Are you living below your means? Comment down below. Let me know how you're adjusting to what is happening right now. Would love to know that. So comment down below. Please like, share, subscribe. God bless every one of you. I look forward to speaking to each and every one of you. So much happening. Please be walking close to God and pray for this country. God bless.